Hello, I'm David Hefty, Chief Executive Officer of Credit Wealth Management.
And I'm Edison Byzyka, Chief Investment Officer.
Today, we're going to cover the facts on how the best returns in the market occur during the worst times. The importance of remaining invested for the long term is something all investors understand, but it is often something that many investors start to doubt during times of market volatility. The latest bear market is a testament to the emotional roller coaster that investors may sometimes feel, which can fuel the desire to exit equity market participation. During such times, we urge investors to allow their financial plan to dictate what the necessary steps should be, because the reality is that many investors cannot afford to miss the benefits that can arise during the depths of volatility.
If the idea of benefits during equity market volatility sounds contrary to conventional wisdom, I would like to unpack that for you. From 1995 through March 2020, which is approximately 25 years, the S&P 500 has annualized nearly 9% for an investor that has been fully invested. Not bad. Consider this, however. If that same investor missed the 30 best days over the same 25 years, the annualized return shrinks to an astounding 1.56%. These are not estimates. They're actually data-driven observations. And here's where things get even more interesting. When further analyzing those best 30 days in the S&P 500 over the past 25 years, a total of 24 of them have occurred during bear markets and economic slowdowns. You heard that right. 24 of the 30 best days in the S&P 500 over the past 25 years have occurred during bear markets, as observed by the technology bubble in the 2000s, financial crisis of 2008, and the current COVID-induced bear market.
Stated differently, those 24 out of 30 critically important days have occurred at what may have seemed as an extremely dire market and economic environment for those investors living through it. Many of you watching this today likely know exactly what that feels like, since 6 of those 30 best days occurred in the month of March 2020. For those of you that remain invested, congratulations are in order.
It is never easy to witness unprecedented volatility, but remaining invested through a multi-strategy platform that attempts to capitalize on increasing equity market participation during times of volatility may be a tremendous positive for your long-term success. We remain committed to such a task.
The chance to become a proactive bear market investor is not lost. If you have questions on how to best accomplish that, please contact one of our financial advisors.